Good morning and welcome to On the Money, right here on WDBO AM, streaming inside your very own WDBO app. My name is Josh McCarthy, sitting on these airwaves with two certified financial planners with the Certified Financial Group. We're so fortunate to be joined by Joe Bert and Davis Hingtgen on the air today. Again, part of the Certified Financial Group, hosting On the Money, a relationship, a program that's been on the air for many, many decades here on WDBO. So if you've got a question, I invite you to stay tuned because there will be information dropped throughout this hour. And if you've got questions, we've got answers in the form of these two certified financial planners. Davis, Joe, how are we doing today?
Good morning, Josh. We're doing great. Good to be with you again. As you said in the intro, we are here to take questions that our listeners might have. This is not a 1-hour infomercial. This is live broadcast, unless you're listening to us at 7 o'clock on Saturday mornings, which is a replay. But here we are, 9 o'clock on Saturday morning. And take your calls, things that might be on your mind about your personal finances, decisions that you're trying to make regarding your mutual funds, stocks, bonds, real estate, 401ks, 403bs, 457 plans, all that and more, the things that Davis and I and the 14 other certified financial planners deal with day in and day out, trying to solve our clients' dilemmas, getting them to and through their retirement years, and what they need to do now so they don't look back 5 years from now and say, gee, I wish I'd have known. I wish I'd have known that because it really could save me a lot of money. So we're here for you. So if there's anything on your mind, we're here to take your calls. And the good news for you is the lines are absolutely wide open. I want to welcome my good friend here, Davis Hingtgen, the newest member of the CFP fraternity here. Davis, it's a pleasure to have you. Davis, in addition to being a certified financial planner, is also a certified public accountant.
Yes, sir.
CPA, had a stint there with KPMG, right?
That's right, yep.
Yeah. And we're delighted to have him. And he's a scratch golfer, too, which I'm very, very envious. Not only is he a good golfer, but he's also a good guy. So we're glad to have him as part of the team here, as part of the youth movement here that we have going on at CFG. So we are here to take your calls. And the topic for this morning, Davis, is what?
It's artificial intelligence, AI.
Uh-huh.
So it seems like AI is everywhere these days, whether you're using it to help you write emails or pick your investments or whatever you have. So today we're here to talk about how it can help you with your personal finances. Well, we'll get into kind of the good, the bad, and the ugly, but why don't we just get started with the good since it's a Saturday morning. So,
All right.
You know, in a meeting earlier this week, you told a couple of us, Joe, that information is power. And I think that's absolutely true. And, you know, I think what AI has done is, in that way, it's brought power to the people at your fingertips. At any given moment, you have access to all of the information that you could ever dream of, to the infinite power, really, whether it's about your personal finances or the weather or whatever you. AI is getting us answers to all of our questions faster and in simpler terms than ever before.
I just used it this week. I had having my annual physical, and of course you get to get your blood test. And interesting, I had my blood tested at 9 o'clock on Friday morning, and by 11:30 I had the results.
Really?
Yes.
Wow.
And so now I get the results, and I had these medical terms. You know, they talk about this, and then where you're in range, when you're out of range. And so I began feeding all this into AI to really decipher it for me and tell me, okay, this means this means that. So like you said, not only financial information, medical information, finding out about the weather, anything you want to know, it's out there.
It's incredible. And, you know, kind of to your point, I used a test prompt earlier this week when I was thinking about what to talk about. I said, you know, I took a random topic. I said, explain capital gains to me as if I were 10 years old. And, you know, by the time I could blink, it had a couple paragraphs explaining it to me. It was kind of neat. It used an example in the context of Pokemon cards to explain capital gains to a 10-year-old. So I was like, wow, that's really pretty cool. So it's incredible what's out there, and it can help you in a number of ways. You know, it gets you those answers faster and in simpler terms. You know, maybe it's January, February, tax season is starting up, and maybe you just took your first distribution from an IRA, so you get this 1099-R form, and you're someone that likes to do their own taxes, so you go, well, what the heck is this form for? I don't know how to use it. Well, you can go to AI, you can ask it, you know, what do these different boxes mean? How do I input it into my tax form? And it'll help you out. You know, maybe you're a new college graduate, you're starting a new job, and on your first day, HR gives you that big benefits package, and you see 401k plan in there and you go, well, I don't know what that is. I've ran a 5K before, but 401 kilometers sounds pretty far. Joe might be able to run that, but I don't think I could. So you go in and ask what a 401k is, or maybe you're 64 years old. You've always been on your employer's health insurance plan, and you want to know how Medicare works because you know you'll be eligible soon. You can ask it what it is, how it works, for your situation, what kind of plan it would recommend for you. So it's really incredible. And you can even run what if scenarios if maybe you've been planning to retire at a certain age, but you're getting a little burned out at your job, and you ask it, hey, what if I wanted to retire a couple of years earlier, what kind of things do I need to consider? So it's really incredible what's out there. And people at home, they might be wondering, well, shoot, if AI can do all of this, then what use do I have for a CFP like Joe or Davis here? And well, I mean, there's still, I think, a lot of areas where AI can't replace the financial advisor. So I wrote a couple of things down. So even with all these capabilities, AI isn't fully equipped to handle some of the very valuable parts of a financial plan, one of which is understanding a client's goals and values. Another one is coaching clients through market volatility. We've been on a pretty great run, but the market goes up and down, and a lot of times they need a person to kind of coach them through those.
That's more critical. And Davis, you've probably heard me say this before, that the most important thing that we can do for a client is get them through those down markets, because this is when historically and statistically it's been demonstrated that this is where most investors blow themselves up. They make those emotional decisions because they're flying the plane and they're trying to figure it out on their own, and they make those emotional decisions and only look back and said, geez, I shouldn't have done that. And how many people, when the war started in April, made that determination, or when Trump got elected, there were people that ran to the sidelines and look at what they missed out, making purely emotional decisions. So our job is to really strip that emotion out from you and let us fly the airplane.
Absolutely. And to your point, when the war started, people might have taken their money out of the market. And I think we just had, one of the best quarters that we've ever seen.
Yes.
So I would hate for people to have missed out on that, because, as you said, they're making those emotional decisions that a professional could have coached them through. But other things, they can help mediate family financial decisions, whether it's between siblings or spouses or multiple generations. We can also help coordinate different questions that go across different functions. So we can kind of coordinate tax planning, retirement planning, estate planning, all those good things. And finally, exercising judgment in complex or unique situations. So, I think that we're doing a good job here of incorporating AI into what we do. I think the best financial advisors are using AI to replace repetitive tasks and not replace themselves. So that ultimately means more time spent doing what's important, helping all of our clients make good financial decisions.
I think the advantage that we have here at CFG, not to blow our own horn, but I'm going to do that anyway, is that the depth of resources that we have, and having 16 certified financial planners, it's knowing what questions to ask. It's knowing because the tax laws are ever changing. The investment world is ever changing. There's new ideas virtually every day. And taking that collectively and then figuring out how that impacts our clients, and then doing the research to figure out what changes, if any, need to be made at any appropriate time. So, we're not a one-man band here, as evidenced by you and me and 14 other certified financial planners, that's the depth of what we bring to us. So AI has given us a great tool to really us to become more efficient, but I don't know it's going to replace us.
Absolutely. Well said.
So that's the benefits of it. We've got some cons. You're going to talk about the negatives to it?
We absolutely do. So there's kind of a number of things that you got to be careful of. One of the things we've talked about is how it can get you very quick answers in simpler terms, but it's important to not confuse confidence with correctness, because we've probably all experienced it. If you've used AI, it gives you that answer very quickly, and it gives you the answer in terms that seem very matter of fact, like there is no no doubt whatsoever that the information is correct, but sometimes it isn't. Just for example, yesterday I was doing a tax estimate for a client. They were going to be taking a distribution from a retirement plan, so just wanted to get an idea of their overall tax picture. And sometimes what I like to do after I calculate an estimate is I'll run kind of the financial details through, say, ChatGPT and just make sure I'm not missing anything. So I did that, and I got an estimate of somewhere around, let's say, 15,000. I threw the same information into ChatGPT, and it gave me an estimate of 9,000. I was like, oh,
Wow.
that's weird. I wouldn't expect it to be off by that much. There wasn't anything complicated or crazy going on. So I read through the answer, and towards the bottom, it got to the right income amount, and then it said, based on someone with this amount of income and applying the 2026 IRS approved tax tables, the estimated tax liability would be $9,000. And so I double checked my work. I was pretty sure I was right. So my response in the prompt was just, well, what tables are you using? And then within seconds, it started typing out a new answer, and it said, after double checking my work,
You caught me.
you caught me. I misapplied the IRS tables, and after reviewing it again, the estimate is closer to $15,000.
So chat said I misapplied the tables.
It did.
Yeah,
It
there-
did.
yeah.
And I didn't tell it, hey, I got 15,000. Like, can you bridge the gap? I just asked it, well, what data, what information are you using?
Where'd you get your facts?
Exactly. So, that's a good example of,
Yes.
it gives you very confident answers, but you need to kind of have the trained eye to review the output and be able to decipher what's right and what's wrong.
Exactly. Like I got my results from I think I used Claude to do my medical stuff, and I'm going to take that information to my doctor and have him tell me, is it right or wrong or indifferent.
Absolutely.
There we are. I hear the bumper music. Josh, take it away.
If you want to call in, join the conversation. We got certified financial planners Joe Bert and Davis Hingtgen on the phone right now. 844-580-9326. 844-580 WDBO. You're listening to On the Money, where we're planning tomorrow
Today.
with the Certified Financial Group.
You guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40. CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board.
Welcome back to On the Money here on WDBO. We got two certified financial groups. The show brought to you by the Certified Financial Group. Two certified financial planners by the name of Davis Hingtgen and Joe Bert on the air today. If you want to call in, if you want to join in on the conversation, if you've got a question about some advice for you and you want to get through your retirement, call in right now, 844-580-9326, 580 WDBO. Let's go ahead and go to Windermere, where David's calling in. David, you're live with the Certified Financial Group.
Morning, David. What's up?
Good morning, gentlemen. I appreciate your show. Very well done. I appreciate that it's not a 1 hour infomercial, like you said.
Thank you very much.
My question is, lately on TV especially, there's a lot of promotions and commercials, like for Invest Y Refi, for example. Right. They're bombarding the commercials with that. Tom Lehman gets on there and all that. I'm sure there's other products like that don't make TV. The interest rates are interesting. It seems like it's anywhere from 6 to 12%, depending on the term. I'm just wondering, obviously it's better than CDs and mutual funds, but What's your opinion on financial products like this as part of a portfolio? And does your firm offer things like this? If it's not that, do you offer other things like this that can get you 6 to 8% guaranteed if we're a little jittery about the market?
There is no guarantee out there that'll give you 6 to 8%. And by guarantee, I mean you're guaranteed to get your money back. You can't compare it to a CD or a treasury bill. Those are the only things, and the guarantee from the bank is only as good as the bank itself, and treasury bills are only as good as the government. But anything out there that says guarantee, they're going to guarantee the return as long as they can continue to pay it. So there is no bottom line guarantee. And if you look at the disclosure offering, what we call a private placement memorandum, if you read the fine print, you will see that it's not guaranteed. There's nothing to say that you will in fact guarantee to get your money back. So in our business here, we are not trying to outdo the market. Our Our strategy is to be a consistent single and doubles player. Don't strike out and don't try to shoot for the moon. I understand everybody's trying to reach for yield, and that, boy, it sounds good because I know those iRefi. I see them all the time. Have you seen them on TV?
Absolutely, yeah.
Yes, yeah, and that's very, very convincing, and it could very, very well work. But in our situation, we don't want to take any chances and have something blow up on our clients. So we're consistently looking for the best mutual fund and ETF managers out there, using a disciplined way of screening through all that and providing our clients well-diversified portfolios with the best-in-class products to get them to where they want to go, and try to stay away from the esoteric things. As long as I've been in this business, there have always been things that'll try to get the client or the investor or the consumer attracted to, and particularly in era of low yields, they're always out there. But in terms of guarantee, trying to compare them to a CD or a treasury bill, they're just not the same. So you do take risk. I mean, that's the price you pay to get that higher rate of return. And basically that's the way the investment world works. If you want to take the risk, you may get the return, but by the same token, you may get nothing back. So that's, I wish I could tell you.
Historically,
go ahead, pardon me?
I appreciate that answer.
Sure.
I appreciate that answer. Do you find historically, seeing these things come and go over the years, do you find that generally looking back at them that they have been safe, or have some been really troublesome and collapsed? And,
oh yeah, I mean, the investment world is littered with ideas that were great investments, looked appear to be great investments, that just didn't work out for various reasons. Sometimes it's scams. I can talk about Bernie Madoff. Look how many people that got suckered into that deal. And there's always been investments that are just sometimes too good to be true, and oftentimes they aren't. That doesn't mean that they don't work. And people will brag about the ones that did work. At the cocktail parties, they won't tell you the ones that they got burned on. So we're not trying to hit home runs here at Certified Financial Group, right, Davis? Our strategy is be conservative and consistent, steady performance and up downs and up markets and down markets, and get you to and through your retirement years and let you sleep at night.
Terrific. I appreciate the answer. Thank you, gentlemen.
Well, I appreciate your call, David. Thank you so much. So getting back to AI, do we have time, Josh, or we're up against the break here? I see
coming up on the break. Yep.
Okay.
So we'll go to Isaac Abdel-Messiah here with the news here. We got Davis Hingtgen and Joe Bert answering your questions, how to get you to and through retirement. Any questions you may have. If you saw something on the news, like our last caller there, and you want to just run it by the experts, well, we got two on standby to pick their brains. 844-580-9326, 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group.
has been chosen once again as one of the top 100 financial advisory firms by CNBC out of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, "Hey Lou, I need to, I'm barbecuing this weekend, right? What do you like?" And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got
DBO.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. My name's Josh McCarthy, certified financial planners from the Certified Financial Group. Davis Hingtgen and Joe Bert answering your calls, getting us through another great hour of On the Money. If you want to join the conversation, 844-580-9326 is the number to call, 844-580 WDBO. You're also more than welcome to send in an open mic question using that open mic feature inside the WDBO app. Joe, Davis, back to you guys.
Josh, I want to, before we get back to Davis and the AI pros and cons, I want to get back to David, who called us a little while ago about these direct-to-consumer products and the ones that have been advertised a lot on TV with high rates of return and so on and so forth. If you listen very closely, and if you get involved in any of these kinds of things, they're offered to what are called accredited investors. Listen for that word, accredited investor. And an accredited investor, by definition, is this investment is only offered to people who have a net worth of more than $1 million, exclusive of their primary residence, or earn $250,000 a year. Now, why is that? Why do you have to be an accredited investor? Because the government, in its infinite wisdom, believes that if you have that much money, you could afford to lose it. So when you see an investment, whether it's on TV or not, or somebody talks you into buying one of these notes that guarantees you this, whatever, if you have to be an accredited investor, get into it, it means that you can afford the risk attached to it. That's what you have to be careful of. That doesn't say they don't work. I'm just saying that that's the red flag that tells you that there's more risk to it than buying an ETF or buying a CD.
I didn't know that.
There you go, Davis. Stick around. All right, so let's get back to the pros and cons of AI. At the top of the hour, we talked about the benefits of AI. So real quick, let's summarize that and get back to the negatives.
Yep, so summarizing quickly, AI has made financial education and education as a whole more accessible than ever. We talked about the many different ways that you can use it to learn more about your finances. And then we started talking about some of the cons. So, making sure to double check its work. One thing I actually wanted to point out on this topic is I was using ChatGPT the other day, and I noticed in kind of faint text at the bottom of the screen that they're telling you themselves to check their work, because it says on the screen, ChatGPT can make mistakes. Check important information.
It's called hallucinations.
Yep. So they're telling you right there, make sure to, if you've got an important matter, to consult a professional before making any decisions. So then the other thing I wanted to talk about is I think that AI is the epitome of garbage in, garbage out. It is only as good as the prompts that you put into it and your ability to take the answers, assess whether they're correct, and put them into action. So it's important that if you're giving it prompts for financial advice, that you give it your full financial picture. You give it maybe your age, your family history and situation, all of your different accounts, your income, what are your goals. I kind of view AI as, you could compare it to a GPS. When you punch in an address, it'll tell you how to get there in the quickest way, but it doesn't know, maybe you want to take the scenic routes, or maybe you're someone you want to avoid the toll roads, or more importantly, it doesn't know why you're going where you're going.
Or I'm sure you've had the experience like I have. You put in the GPS and all of a sudden take you a route that really makes no sense whatsoever.
Right. Yeah. It thinks it'll be the fastest route, but it takes you on these back roads, these twists and turns, and it's like, well, I would have probably preferred just an easier, more direct route. So it's very important that we understand it really comes down to us. We can't put full faith into AI and just trust that it has our best interests in mind,
right?
Like your financial planning professional will.
Right. So that pretty much wraps up the AI. It's a powerful tool, but you really need to know how to use it. And I see we have a text question float in there, Josh.
We sure do. That seems to be the trend across all industry. Is AI is powerful if you know how to use it. If you come in blind, you might get some answers that only the blind understand.
Absolutely.
And that's the beauty of the experts here. They know how to ask the questions, they know how to decipher the info, and they know when it's a bunch of hogwash. So you want to call in 844-580-9326. Carol from Orlando writes in, right on topic today. Carol has started using ChatGPT to ask tax and investment questions, and she wants to know how much should she trust these answers before making financial decisions.
Well, you just had firsthand experience this week, right, Davis?
Absolutely. So I think this gets back to what we've been talking about throughout the show. AI is an excellent educational tool. It can be great for generating ideas, but it really should not be the final authority for when you're making important decisions. Like we said, ChatGPT tells you that it can make mistakes and to check important information.
Yeah, I think the key is to know what questions you want to ask and be as specific as you can about the prompts, and then once again, take it with a grain of salt.
Absolutely.
Run it by your advisor, and just to confirm it. That's what we're here for. So,
absolutely,
okay.
You do the same thing. If you had a legal question, you would run it by a lawyer. Joe's got his medical questions. He runs by his doctors. you got to consult a professional to make sure you're doing what's best for you.
Right. It's a great source of information, but you need to be careful of it. I see another text question there, Josh.
We sure do. We got Dylan coming in from New Smyrna. Dylan says, I'm seeing advertisements for AI-powered investing that claim they can outperform the market. That old game. All we want to do is outperform that market. And Dylan, of course, wants to know, are these services worth considering, or are they just marketing hype?
So I think this kind of relates to the call-in question we got earlier. I would say be wary of anything that's promising guaranteed returns, because AI, it can consume a vast amount of data. It can analyze things at a very quick pace, but it can't predict the future, right?
When we get to that point, not yet. Yeah, I think once again you have to be careful, and the power of AI, it can make everything that seems unbelievable believable.
Mm-hmm.
And that therein lies, and then it's so convincing in how it does it, and then AI gets to know you, and it really gets inside your brain. So you really want to be careful. Powerful tool, but in the wrong hands, or the wrong application, can be dangerous.
And I think it's important to remember, Joe kind of touched on it earlier, that investment success, it still comes down to kind of a long-term time horizon, discipline, and kind of being able to decipher what's good and what's bad for you.
I think there's a distinction, and listeners need to understand there's a difference between investing and speculating. Speculating is, you hope this works out because you're trying to hit the home run or whatever. Mm-hmm. But investing is a long term, and that's what we do here at Certified Financial Group for our clients. So we're looking to get our clients to and through their retirement years, not to have one big return or knock the socks off some great investment that we suggested. That's not what we do here at CFG. So,
right. And I think this is even more applicable now because, in a run that's been so good in the market, you've got a lot of people that have that FOMO, that fear of missing out. They, like you were saying, they go to their cocktail parties, they hear people talking about how they made so much money on this investment or that investment that they've got a fear of missing out. So all of a sudden online they see, AI can guarantee me this amount of returns in excess of the market. Well, sign me up. It's very important to be wary about anything that says guarantee.
Yeah, especially any investment offered over the internet. I mean, I'd be very, 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 very skeptical, because if it's great, it's not going to be great for long. I mean, if you've been in the business long enough, that's a red flag, absolutely red flag. But if you're sitting at home and you had a glass of wine or two, and this looks like an opportunity to score, you may want to think twice about it. So.
Yeah, and I think that highlights too the availability of information. Kind of going back to the pro we talked about for AI. I mean, it can be a Tuesday night, 10 o'clock. Maybe you've already streamed 4 episodes of your favorite Netflix show. All of a sudden, question pops into your head about this or that topic. All of a sudden, you can look it up on AI or on the internet and have an answer to you, and all of a sudden think you're an expert.
Yeah, and then you end up down a rabbit hole, and an hour and a half later, you've got your credit card out, and you make that investment. Yeah, a lot of that stuff's going on. So I see another text question there, Josh.
Absolutely. Justin writes in. Of course, if you want to call in, if you want to join the conversation, we do have Joe Bert and Davis Hingtgen live on the air, 844-580-9326. If you want to call right into the offices and talk to somebody off the air, if your question is a little specific, whether it's personal or you want to just get right down to your exact numbers, we do have Rodney Ownby taking calls live off the air right now at 407-869-9800. That's 407-869-9800. Back to the text question as Justin writes. I have several stocks with large gains that I'd like to donate to charity. Is it better to donate the shares directly or sell them first and give the cash?
Well, I would say that it's definitely best to donate the shares before cashing them out. The reason being, if you donate prior to selling, you won't be subject to the capital gains tax. And also, if it's long-term stock, you'll be eligible for a tax deduction equal to the full fair market value of the stock that you've contributed. So I think it's a good question. We get a lot of clients coming into the building that are charitably inclined, and they want to know best ways that they can contribute. And a lot of times, the best way is going to be with that long-term held stock that has a large amount of gains because, like we just talked about, you're not going to be subject to those capital gains. If you sell it, cash it out, and then donate the cash. And also, you're going to be eligible for that bigger tax deduction.
Yeah, so you want to be careful that you do that. We had a great presentation. Do you sit in on the donor advised fund today?
I
this
did.
Week? This
Yes.
week? Yes.
Yep.
So why don't we talk about a little bit about that and how that ties into charitable giving?
Absolutely. It's another great vehicle. I think, it's typically for people that don't just want to give a little bit here or there. It allows you to set up, like the vehicle says, it's a donor advised fund. So I believe how it works is you kind of give it the initial investment, and then it will, let's say Fidelity is who came to talk to us about it. You then can make suggestions, although I think they're always going to take your suggestions, make suggestions to them on how you would prefer those funds be allocated to the different charities that you like. And meanwhile, they're in investments, and it gives your money an opportunity to grow and give additional funds to charities.
Yeah, it's a very, very flexible tool. I use it myself. You make a contribution directly to the donor advised fund. You get the immediate tax deduction, even though the money might not go out to the charity for years in the future.
Mm-hmm.
And then you can designate, as long as it's a bona fide 501c3 charity, you get the tax deduction now, and then you tell the donor advised fund, whether it's Fidelity or Schwab that we use, when you want them, where you want the money to go, and when you want it to go, and how much you want it to go. And what brought it to mind is this text question we had about the capital gains on the stock. You could donate the stock into the charitable and the donor advised fund and avoid, once again, the taxation, get the tax deduction, and then use it for charitable contributions in the future. So it's a tool that we use with our clients. If you want more information about that, check with us, check with Davis on Monday morning, and we'll be here. All right, we got another text question there, Josh.
We sure do, but as the music comes to a close, we can say, Grace, you are up next after this break. If you want to join in, 844-580-9326, 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC out of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot,
I want to.
Welcome back to On the Money here on WDBO. Another great hour of financial advisory in the form of Davis Hingtgen and Joe Bert, two certified financial planners with the Certified Financial Group. We also have Rodney Ownby taking your calls live off the air right now at 407-869-9800. 407-869-9800. And Joe, Davis, if they want to come down to the office, there's ways to do that too.
Yeah, a week from today, tax planning through the 4 stages of retirement, going to be hosted by Certified Financial Planner Wynn Smith. He's going to talk about what you need to know and when you're in those retirement years of withdrawing money from your brokerage account, from your 401k, from your IRA, from your Roth, all those things that need to be considered, how they impact IRMA and Social Security and all that stuff and more. So it's absolutely free. If you want more information about that, go to our website. That's financialgroup.com. Financialgroup.com. You can make a reservation right there. We can accommodate about 30 people very comfortably in our state-of-the-art learning center. And we hope to see you there a week from today at 10 a.m. And we've got a text question there, Josh.
We do, as we talked about. Grace from Oviedo snuck in just before the last commercial break, so now we'll get to her question live on the air. Is it safe to enter my personal information into AI tools like ChatGPT?
Davis.
And I think that's a pretty simple answer that no, it's not safe to do that. I like to think of using ChatGPT or whatever, if you use Claude, Grok, whatever AI agent you're using, to think of it as a public conversation. You don't want to be giving it any of your personally identifiable information. Nothing, definitely not a social security number, no account numbers or anything sensitive like that. Because like any sort of technology, there are ways to exploit it, and we want to make sure you're getting the answers you need from those sources, but also that you're keeping yourself safe.
Yeah, we have very strict protocols around here about what you can and cannot do with AI. And PII, as Davis alluded to, personal identifiable information, is really where you cross the line. So you want to be very, very out on the internet, because once it's out there, it is out there. Yep.
Absolutely.
So once again, I want to wrap up with thanking Davis for being with me this morning. It's a pleasure having him on the team and being on the radio. And we want to mention Score My Funds, and many, many of our listeners over the years have taken advantage of. It's an opportunity for you to have the quality, the investments that you have in your IRA or 401k or personal account, whether mutual funds or ETFs, not individual stocks, but mutual funds and ETFs. We will score them. We'll run them through our system. It's a program that we use that's offered by the Center for Fiduciary Studies. We will do a deep dive into each one of those investments and grade them on 11 distinct criteria, everything from performance to manager tenure to expenses to risk versus reward. And then we'll score it for you on a scale from 0 through 100, with 0 being the best, like Davis can relate to in your golf game. The lower the score, the better. And 100, you should never bought that thing or should definitely get out of it. So it's absolutely free. Go to our website. Go to the website. It's scoremyfunds.com, scoremyfunds.com. You will put in the ticker symbol. If you don't know the ticker, there's a pull-down menu, and just put in the name, and we'll get that to you, and we'll get that report to you within 48 hours. And if you want to follow up on how we might be able to help you straighten out that mess perhaps that you bought. And real quick, I wanted to mention, this week I got a solicitation. We got all kinds of stuff floating in through here to sell annuities, and we don't do that. These big expensive annuities, these are the ones that offer the bonus. Sign up, you get a 20% bonus and guaranteed income of 10-12% for your life, offering a 31% commission. Now just think about that. If I get a client to put $100,000 into one of these things that guarantees them all this other stuff, I'm going to make $31,000.
Wow.
Boy, I could buy a lot of free lunches with that, couldn't I? A lot of dinner seminars. So you want to be very, very careful about these people that are touting annuities. Some are good, but some that have these extraordinary promises, there is always a hook. And if you want some more information about how we can maybe get you out of those messes, once again, contact Davis or me on Monday morning. We are here for you. And I hear the bumper music. Josh, take it away.
Of course. Thank you so much for listening. Rodney Ownby taking your calls live off the air. If a question pops into your head as this episode is coming to a close, Rodney available to you at 407-869-9800. You have just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.